yesterday, in fact, didn't we? And well, you can see for yourself. I mean, there's a crazy buy side vol trade here, isn't it? A crazy buy side vol. And with a crazy buy side vol, obviously that means sell side equities. So selling equities off the 75 wasn't obviously that difficult. And we've just traded 725 break. So another 50 points. So we went 50 points in the bid, 50 points in the offer. That's 100 points round trip. And if we've done 100 points round trip, how much is that in terms of a one contract trade? Well, in my world, that seems to be around about a $5,000 per contract win on the S&P. Never mind the Nasdaq, on the S&P itself, which is kind of crazy. We like it, yeah, kind of. We kind of like it, don't we? And according to the valuation here, it looks like we might have a little bit more. Can I have some more, please? We might have a little bit more to go in this one as well. So interesting. So we can obviously see here. Something we were working on last night is the relative value. And the relative value is in here. And if it's above the zero, that means that the relative value is on the sell side. So you can see it briefly drops below the zero down in here. So you see it drop zero, it touches the zero fair value. But as soon as it's above the zero, it's actually sell side. You can see that the majority of this entire has been sell side in terms of net value. See this here, that you can see that there is a relative value buy trade below the zero here on volatility. You can see that prior to that, volatility had a relative value sell trade here. And obviously that sell trade resulted in a fairly decent drop in vols, which obviously is long equities, which allowed me to buy this 25 price this morning. But this relative value buy trade on vols here allows me to buy volatility and take the market back up again. And this is trying to get closer and closer to the market maker storyline, and that's what we're trying to ultimately do with this: is get closer and closer to the market maker storyline, which is kind of part of the commentary we've been calling out today. I'm currently short gold, by the way, guys. If anybody's with me on gold, we kind of gave you as much as we could on that one, you know, but obviously we told you we were getting this. What did I tell you? What was my narrative? Forget that. What was my narrative? I told you at the time that because we were seeing the selling at the bottom edge, I would expect to be able to sell the pullback at the top edge. Yeah, did everybody get that from the narrative? So if you got that from the narrative, then of course you got the trade, because we got a nice pullback, and from that point onwards, we've been selling from the 37s. And we've managed to just tap the 30 liquidity there. So a very, very nice profit. Now, the problem we've got is the value is going bid. And with the value going bid here, it was a nice opportunity for me to start booking up some cash here. So I think I'll do that just now. We'll just pop that in here and I'll bring in some orders to book some of that 30. It's nice. Now, this is why it makes sense, because ultimately what's happening in here is the market maker will rotate these prices. A lot of people think market makers rotate based on these huge sweeps in the background where you see the big rotations around $1,000, $2,000, $3,000. But the market maker rotates these areas. Does everybody kind of understand that about market making? They rotate far smaller areas more often than large areas, right? So they rotate far smaller areas more often than you might think. So at the bottom edge, they'll go bid. At the top edge here, they'll go offered. At the bottom edge, they go bid or offered. If they go offered, start selling the top edge pullbacks, right? So when you see that as a process, so if I see them going offered down here, I'll then sell up here. Because if they're now selling the bottom edge, I'm now selling the top edge. It's as simple as that. I'm selling anywhere else that I can get short into this. And obviously that sell trade's actually doing okay, isn't it? It's not a bad little bit of business, I suppose. I do have a position, that extra add-in position on the Ninja Trader. I took profits on the my original short position, but I want to just show you it anyway, so that you know that we're doing what we're saying we're trading here. So that's the current trade that I got on again off the last rotations. And basically, what I started to see was so let me just detail exactly how this trade evolved in terms of market making. So what happened was the market maker sold here, and you probably heard me live, and you can tell me if you did hear me live here, but I told you they're now selling the bottom edge, right? So you'd have a choice of selling the bottom edge here. So obviously what happened was that if you decided to sell the bottom edge here, of course, what happened was that you might have got a really good price, you might have got a poor price, whatever. But anyway, what the market maker did was they started to buy the bottom edge. So they started to buy into this dip here. So what I'm now looking for is the same thing to happen again at these lower edge prices. So when the price rotates back up again here, we can obviously start recognizing that the market maker will sell up here, which they did. It doesn't mean it's going to trade out, though. It doesn't mean it's going to trend out. But if the market maker sells there, you're probably going to start watching as they trade in here. Now, what happened, of course, was the market maker bid here. But then all of a sudden, the market maker went offered here. So as soon as the market maker went offered here, I'm already back looking now to actually get short again here. And as I get short here, knowing that the market maker is now there, I'm expecting this level to break sell side and take advantage of the next week lower. And that's exactly what's happened. And in a little three lot trade, it's $2,300, which is pretty good, right? $2,300. So again, it is what it is. Like it, don't like it, trade it, don't trade it, make sense of it, don't make any sense of it. But it's still, that's what the trade was as far as I was watching in terms of tape, in terms of book. And we've obviously had a very, very nice big win out of that trade. As you can see for yourself, very nice big win out of that trade. And long may she continue. So nice breaker. Three contracts now up $3,300 on that three contract sell. So if you're still with me on that gold, remember we've been kind of commentating on this gold since this, even since this top edge was put in here when we told you to be not selling it again here, remember? So during this little phase, I told you we're not selling it again because it's going to go up and we're targeting the 35s, I told you at the time. And that stopped you from selling at that point. But we started to resell it here, as we told you. We told you that they're selling at lower prices here, which meant I was then selling at higher prices. And we've done that twice now. And they sold at lower prices again in here. Sorry, it was in here they sold at lower prices because they bought this dip here. They sold again there. So I basically then sold in here. And that's my two trades. So I see the selling at lower prices. I sell the higher price. I see the selling at lower prices. I sell the higher price, and that's how I trade. That's basically how, as a professional trader, if I was on the floor, that's how I would be trading from a floor trader's point of view. If I was on a prop desk, that's how I would be trading on a prop desk. So, that's just the way. That's the way we make our beans.